Hello, friends. Today I'm going to discuss how choosing a wrong business entity can be a very costly mistake for people. And I'm going to share some use cases and I'm going to share some ideas how you can pick a proper entity. However, my recommendation will still remain that you do discuss your individual case with your tax professional to figure out what makes most sense in your particular case, because it's just not possible to discuss every single element of picking a right business entity in a small video. Just yesterday, I was talking to a client of mine who had recently started a small business. Congratulations to him. And as you guys know, I love people who start their small businesses. And what he has done is provide training to those people who are looking to get into IT industry. People who are just brand new, they just don't know how to use the tools, they don't know how to get into the market. So wonderful service. And when I start talking to him, he had already set up an LLC. And when I asked him about his revenue, he had no revenue. It was zero revenue. He said, look, my business model is as such that I provide the service at no cost to customers. So no charge. So people wants to learn how to do their testing, how to use software, how to run various tests to check out the softwares, find bugs in them. I do it all for free. I'm like, why do you do it for free? What kind of business is that? He says, well, my business model is that once people are trained and they get a job in their industry, I get paid by that company who hires them. And because nobody has really hired any of my candidates just yet, therefore I don't have a revenue yet. So my obvious question was, in that case, why did you set up an entity to begin with? And the answer is the same answer that we hear over and over again, that I was on YouTube or I was on Facebook or Instagram, or I talked to my friend, family member, and they said, in order for you to have a business, you got to have an LLC. Not true. Not true at all. You can start a business just by having a domain name. Put up a website, start offering your services, attracting people to you, and start doing some business. Start making some revenue. There's no reason for you to set up an LLC. The main reason you set up an LLC is for liability protection. So my obviously next question was, what kind of liability do you have in this business? And you're like, well, I don't have any liability. So once again, if you don't have a liability, why did you set up an LLC in the first place? Primarily because somebody said so. What most people do is they try to, go to LegalZoom, or they use one of those do-it-yourself methods, try to do some sort of business entity structure when they're setting up a business. Now, there are some major issues with that, and I want to make sure that everybody understands this. The main reason you're setting up an LLC is for liability protection. And if your LLC cannot offer that, then why are you setting it up in the first place? Just because you register an LLC with a state does not give you a liability protection. There are some additional steps you need to do to make sure that you are properly protected. But whoever set up that LLC, or if you did it yourself, they're not going to talk to you about that. And that's why you go to a tax professional or an attorney to make sure that it's done right. So that's my number one suggestion. Please at least set up let's say if you want to do it yourself, at least bare minimum, set up a consultation appointment and run it by them to make sure you're not missing out on something. That's point number one. Number two is they need to pick what kind of entity that should be. Should it be an S-Corp? Should it be a C-Corp? Should it just be LLC? Should it be partnership? Should it be sole proprietorship? All of those kind of fall into as to what kind of how your LLC will be treated. So it's important to know how do you want it to be treated. So we'll talk about all those just in a second here, but let's go back to what I really wanted to discuss is some of the common mistakes. So number one mistake I see is people just randomly setting up an LLCs when they don't even need one. Somebody says, hey, I'm going to set one up for $500, $1,000, let's do it. And then there's the other side of people who say, look, I'm going to charge you 10,000, 20,000 because you need a special LLC in Wyoming. You need a special LLC here, there, and there will be a foreign LLC that will manage that LLC. Then you will have a holding company that will manage all those. Then we'll have a trust. That trust will manage this and that, and they make such a complex structure and end up making it 10, 15, $20,000 bill. Again, do you really need all that complexity in life? Does that really provide any protection? Maybe it does, but for most people, probably not. So you need to understand the cost associated with all that mumbo jumbo if you did need to set one up. So two extreme ends, people who set one up when they don't need it, and then people who set up something that is just overly complex and just once again, you don't need that either. What do you need? You need a basic stuff. You need a good tax efficient entity that works for you, that provides you a limited liability protection. That's what you need. So we are going to focus on that element. Second mistake I see is when people treat LLC in a not tax efficient manner. So for example, let's say you're buying a real estate and somebody says, oh, you know what? Let's set up an S-Corp, because the S-Corp offers benefit A, B, C, D. Bad choice. You're going to run into a lot of trouble. Not a good idea. You need to just keep it as LLC and don't choose the S election. That can be a very costly mistake. In a similar way, sometimes I see businesses and they're starting out a new business or a new consulting company, and right off the bat, they want to set up a C Corp. Again, why are you setting up a C Corp? You're not a big, large corporation. You don't have a team of attorneys and accountants managing anything. You don't need to do any kind of special reporting. Why are you getting into all that mess for C Corp? Now, sometimes you have no choice. Maybe you have an investor, maybe you're raising funds, maybe you have other requirements, maybe, some partners requiring you, who knows? Sometimes you have no choice. Maybe you have to do it. But most of the time, it's an unnecessary burden, like something you don't have to do. You can, just a simple LLC or a partnership or an S Corp is more than enough for you. Another one I see is what we call limited partnerships. And sometimes those partnerships are required, but oftentimes you don't need partnerships either. And those partnerships can be very, very costly because they come with all bunch of extra requirements that you don't have to deal with. So be careful with those as well. I think back in the day, there was a reason why you use partnership, but not anymore. I mean, it's been a while since I've seen somebody using a partnership. So those are gone. LLCs are the way to go these days. They're very tax efficient, very flexible. See, what happens in a business is your business has a life cycle. Your business sometimes just need to be sole prop. Sometimes it needs to grow into an S corp, and sometimes it needs to grow into C corp, and sometimes it needs to go back from C corp to S corp. So depending upon what the tax situation of your business is, we can go back and forth and make those adjustments. So be very, very careful with that. It's not like, one entity and that's it, and then you're done. Now, before I talk about some of the other mistakes that I see with LLCs, let's talk about some of the compliance. So number one, you have a requirement from your state, depending upon which state you are in, that Secretary of State might require you to file some report with them, and there might be some fees associated with that. Some states charge a fee just for operating an LLC. For example, let's say California had a minimum $800 franchise tax, and then you have that additional reporting requirement. And starting this year, I'm recording this video in 2024. So starting this year, you also have a reporting requirement with FinCEN, meaning you need to tell FinCEN who are the beneficiaries of this particular LLC. And that could be C Corp, S Corp, or an LLC. And when we talk about beneficiaries, we are talking about pretty much who actually benefit. Like they don't necessarily have to be owners, but if they are a key person, they benefit from that company, even they needs to be reported on that reporting. So you can't really hide. Basically, anyone who has any link to that LLC needs to be reported. And if you don't do that, the penalties is $500 a day up to $10,000. So pretty expensive penalties. And if you intentionally ignore it, there are more penalties and even jail time. So please be careful. You do need to file those reports. If you set up an LLC this year in 2024, then you must file that report within 90 days. If you make any change, if a beneficiary of your company changes, then once again, you need to update that report within 90 days. If you have already had an LLC, like last year, then you have till the end of this year to file that report. But why wait, right? It's an informational report. Just file it, get it done, so that way you don't have to worry about that. So just want to make sure if you have an LLC, don't miss out on that important point. Uh, so let's talk a little bit about rental property. So a lot of people who are setting up LLCs are not necessarily small business owners. They are doing it for buying a rental property. So what kind of mistakes I see there? Number one I see is sometimes people set up an LLC in a different state. So let's say I want to buy a property in California and I set up an LLC in Texas. That's going to create a problem because first, I have to pay Texas, state of Texas. Then I have to set up another LLC in California as a foreign entity, which is obviously linked with my Texas LLC. And then once again, I have to pay that $800 tax. And that LLC now owns the property. So I created all bunch of extra layers, all bunch of extra compliance, which was completely unnecessary. All bunch of tax issues as well. So try avoiding that. And like I said earlier, sometimes you might see videos, oh, you must do it in this state, that state. 99% of the time, you don't need that. Majority of time, you just need to do the LLC in the state you're doing business in. So if you're doing business in California, you're buying a property in California, do your LLC in California. So the most common mistake I would see is number one is that people set it up in the wrong state. That's a mess. Number two, they will set up an LLC and then they will put it like as an S-Corp or sometimes even C-Corp. Again, a big problem. Third problem I see with that is when people have partners. You know, if you're doing business with, I guess anybody other than your spouse, if you're doing business, if you're your friends, family members that are doing business with you, you got to have a proper agreement and you got to have proper minutes and you need to properly take votes. You got to properly keep the meeting minutes because you have another party involved in that transaction. If you don't do it that way, once again, that LLC can go in so many different directions. You don't want to go there. You want to give it a structure and make sure that everybody lives by that structure. And unfortunately, majority of the time, that structure is missing. And I think I don't really blame people for that either, because a lot of times people are missing structure because they think it's very expensive to get it done. It's not. Normally for about between $1,000 to $2,000, you can set up a properly good LLC with all the paperwork in place. So that's one thing. So please don't forget that. So let me break down what LLC actually does. So a lot of time people think that LLC saves them on taxes, which is not true. LLCs don't save on taxes. LLCs just a legal structure to set up an entity that allows you to separate your personal assets from your business asset. It creates a boundary for liability. And even that boundary is only for things that happens by chance, not necessarily that you do things intentionally. So for example, let's say you set up an LLC and then you go out there and try to do some fraud and that person sues you and you go to court, hey, wait, I had an LLC. That's not going to work. So it needs to be a reasonable kind of thing where that LLC will come into place. And even then, it needs to be properly structured. It needs to have all the paperwork in order, and then it would work. So separation of assets, separation of liability, that's what LLC gives you. So understand that. Nothing to do with tax. Tax picture comes into play when we decide how we want that LLC be treated for tax. We can treat it as sole prop, partnership, S-Corp, or C-Corp, and each one of them gets treated a little bit differently. So that's the process. So sometimes people say, well, I have a business and that business owns a property. And obviously, I also run a business. Let's say you have a grocery store or a gas station or a liquor store, something, or restaurant, and maybe you own the property, and on that property, you're also running a business. So what do you do in that case? Our recommendation usually is that you set up two different LLCs, one to operate your business and one to own your investment property. And then your business rents out that investment property from you. It's a great tax saving strategy as well. So for most cases, it's highly recommended. Sometimes it might not work, but majority of the time it does work. So once again, I'm just having some generic conversation with you, but before you make any decision, please run it by your tax professional just to make sure that we got um, everything covered there. Essentially, what happens is you have operations on one side, you have your assets on the other side. So all the income from your assets, all the income from your operation flows down to your 1040, and then all that income ends up uh, basically everything, all your assets, all your income, all your bank accounts, your equity accounts, all of them eventually end up to your revocable living trust. So that's how you want that entire structure to work out. So let's move past the LLC now, and let's go back to that example. Like where at what point do you choose what? So let's say you're starting out a new business. Maybe you're building a website, or maybe you're starting out a small business out of your garage. If you don't see any liability doing that work, so what do I mean by that? Let's say you're starting out a food business. You're going to be doing some catering or providing some food service to people. Is there a liability in that food business? Absolutely. Somebody can potentially have an allergic reaction or some other issue with the food. You have to have an LLC to protect yourself, and proper LLC with all the paperwork in place. However, if you're building a website, your liability is probably minimum. In that case, if you don't have an LLC right away, that's okay. You can start out with a sole prop. If you're doing window cleaning for somebody, or maybe you hired some people to do the window cleaning for you, then you do need to have an LLC because you can go scratch those windows. Windows could be expensive, and the homeowner can try to come after you. Could be an expensive proposition. So if you're doing that, don't do that. If you're a tutor, you're training some students and you're doing it maybe online or Zoom, and the risk of somebody getting hurt from you is non-existence, then maybe you don't have an liability, and hence you don't necessarily need to set up an LLC. You're okay. You can survive. So you kind of have to see whether you have a risk involved or not. If you have a risk involved, then you've got to set up an LLC. So far with me? All right. So let's move past that. So let's say you start out a coaching business that has almost no risk. And you say, okay, in that case, I don't need LLC. Great. You get started. You just simply advertise. You get some students coming, and now you have some revenue coming. Now that you have a revenue come in, and we are in the month of January, so by December you can scale this business. You can significantly increase your income. If you feel that is true, then it is a good idea to set up an LLC. But we're not going to do anything with your LLC at this point. We're just going to leave it at LLC. If your income grows, let's say past $20,000, $40,000, somewhere around that mark, then we are going to convert that LLC into an S-Corp. But if it doesn't, let's say if it stays like 20 grand or something like that, then you don't need to convert. You just leave it as your simple LLC. And we just take that income in your Schedule C, and life goes on. When your business grows, that's when we convert it into S-Corp. And if you're bringing on some investors and they're requiring you to have it as a C Corp, then we consider making it a C Corp. So we kind of have to see what kind of business you are doing, what kind of income you're generating, and how does the life cycle of your business looks like. By paying attention to all those subjects, then we can determine what might be a good entity for you. So you may ask, well, why go S corporation? So the answer lies in the F word, FICA. So this FICA tax is almost 15%. And what happens is when you are simply on Schedule C, meaning you don't really have any entity, whatnot, you pay FICA on your entire income, which is because you're a business owner, it's known as self-employment tax as well. And that FICA is 15%. That means your entire income is taxed at 15%. Now, that's not a problem if the income is low amount, 20, 30, maybe even 40 grand. But when that income grows 100, 200, 500K, then that FICA is expensive. We want to reduce that FICA. And that's where the S corporation comes in. So we can do some tax strategies to reduce that FICA tax. Now, how do we do that? By having an S-Corp, we basically divide your income into two sections. Section one is your salary. Section two is your profit. So profit, we don't pay FICA tax on. Only on your salary, we actually pay FICA tax. So you cannot do that with the LLC. In order to do that kind of structure, you need to upgrade that LLC into an S-Corp. So when the right time comes, we do upgrade it. Now, sometimes I see like people have this mental block. They see like S corp maybe as some like small corp or something like that. But a lot of big people own S corp. Joe Biden, for example, I think he had few books he written. They were under S corp, and for that matter, many presidents wrote books. Right? If you check out their tax return, then more than likely they're probably S corp. So a lot of people use S corp. So don't think anything small about S corp, even though they are really designed for small businesses. Now, what are the some of the most common mistakes I see with S-Corp? Um, Reasonable salary. So sometimes what will happen is people will take and will say, okay, zero profit, and they're gonna say $100,000. I'm sorry, $100,000 profit and zero salary. Now that's not good. I mean, if you're not taking any salary, how is your S-Corp running? Who is running that company? Why would you not take any salary? That doesn't make any sense. So we have to take a look what kind of industry you are in, what kind of work you are doing, and come up with some reasonable comp. And if you don't take that reasonable comp, then you will attract IRS audit, and that can obviously be a costly mistake. Second thing I see is people putting assets in S corp like real estate. That can be a costly mistake. So try to avoid that as well. Is there a rule of thumb that you can use? I would say if you're making anything over 40K, you got to move into S corp. Staying at LLC might not actually make sense anymore. And this FICA tax savings, as you can see, it's 15% almost. So let's just say if we can save FICA tax on $100,000 a year. That's $15,000 a year in tax savings. So if your company lasts, 10, 15, 20 years, that can add up a lot. I mean, that could be somebody's 401k plan. That could be somebody's retirement. So don't make mistake on this one. You got to get your entity structure right the first time. I guess the another uh, commonly thing that I hear from people is, well, either people will think S corp is for small people or they will think it's for really large businesses. And that's not true. S corp is for anyone who has income thresholds. Like I said, I mean, technically anybody can have an S corp, but in my opinion, I think anything over 40K, that's when you should really think about S corp. Okay, another one I see is a lot of time people try to create multiple S corps because they have multiple businesses. Now, sometimes that might be good strategy, but oftentimes they're doing it without really properly thinking it over. And that is costly because you're adding all bunch of additional complexity in the tax world as well as for your cost as well. So it's okay to run multiple businesses under the same S corp. You don't have to have multiple S corps. So that's fine. Okay, so let's move on to C corp. So what are some of the common mistakes I see with C corp? Well, number one is just setting up a C corp when you don't need one. If you have a bit, let's say you have few partners, yeah, unless you're going into like you're raising funds for startup where all bunch of these big gurus from Silicon Valley are involved, just set up a partnership, set up an LLC, operate in that partnership, and work things out that way. No need to go C corp route. Only if you're raising large amount of funds, then C corp might be beneficial because those investors might have some unique requirements. Don't put your assets like your real estates in a C corp. That can be a costly mistake as well. If you already accidentally have a C corp, maybe somebody set one up for you, or maybe you accidentally choose a C corp, then you need to talk to us about converting it back to an S corp. Otherwise, you're just kind of heading in the wrong direction. You're paying out too much taxes. Sometimes people argue. Sometimes people will come and say, well, C corp is only at 21% corporate tax, versus I'm paying 33% tax. Well, C Corp is double tax. You pay corporate tax, and then whatever income you take out of C Corp, then you pay your individual tax as well. So don't mistake by that 21% rate. That can be quite attractive, but it doesn't work that way. So it's usually more. In most cases, S-Corp comes out to be cheaper than C-Corp. So just keep that in mind. So those are some of the mistakes that I see when people are setting up entities, and those are costly mistakes. Very, very costly mistakes, especially over the time of your business. Having that said, having an entity is good. It shows the world that you are a legit business. You get to have an EIN number. You get to build your business credit. You get to have a business bank account. You get to have a business website. I mean, you can have a business website without an LLC too, but it looks legit when on your website it shows that you are a properly incorporated business. So comes a lot of benefits along with it. You can get credit cards or under your business name, so you can build a lot of wealth that way as well. If you know how to leverage debt, then you can use that to your advantage. You can buy properties if you need to. You can raise funds. So a lot of stuff comes along with having a proper incorporated entity as well. So don't undermine it, but always understand there are two aspects. There is liability aspect, and then there is tax element. So those two are there. And then never forget, there's always insurance. So insurance kind of somewhat helps you cover your liability as well. So getting a good insurance that covers various aspects is also very, very important. If you guys want to hear more about this subject matter, if you're a small business and you're starting out a small business, you already have a small business, then one thing I can recommend is we run a small business advisory group. And this group, it's a paid group, it's $300 a month, and we meet once a week. And on that, every single week, we discuss how do we grow our businesses. That's the goal. So instead of working outside of our business, working in the business, we focus on working on our business. So that kind of get us focused into how to grow our business. And then and that's not just about tax. We talk about tax. We talk about finance. We talk about reading profit and loss statements. We talk about your bank statement. We talk about credits. We talk about debt. We talk about finance in general. We talk about the equities market. How are they performing? What kind of data are we getting out of there? We talk about real estate. We talk about employees. We talk about operations. We talk about marketing. We talk about everything that is required to grow a small business. So if you need some help with your small business, then I will recommend you join that group. I run a financial outlook calls every couple of weeks. You're welcome to join those. Try those out. See what you can learn about the financial markets. Real estate calls, you can join those to learn about what kind of trends are popping up in the real estate market. You can come to our live webinars. So we do a lot of those and we answer your questions. We have live events. For example, we have one coming up in Milpitas, California. We have one coming up in Houston, Dallas, Texas. So a lot of live. I mean, we're out there. And if you are a business owner, maybe you're a realtor, maybe you're an insurance agent, mortgage guy, or some other local influencer, and you want to partner up with us, reach out to me. I'm easily available. Reach out to me, talk to me, and let's see what we can do together. We are out there to help small businesses grow their wealth. So I hope you found this information very, very helpful. And I would love to have an opportunity to talk more with you. So if you want to talk to me, just set up a 15-minute discovery call from my website, and let's talk and let's see how we can help you grow your business. All right. Thank you so much. Bye-bye.